Joining me now is Jason Furman. He is the former chairman of the Council of Economic Advisors. Jason, welcome. So the best pro-tariff argument I've been able to come up with is this. The U.S. post-COVID is in the best economic position in a generation versus the rest of the world. So if we hike tariffs, even to an extreme now, to force a redesign of the world order, we can withstand the pain longer than any other country. And the benefits we see in a couple of years will be worth it. Why is that wrong?
First of all, we are in the best shape, so I agree with their premise. That's why would you want to mess it up and rock the boat that created that prosperity first? Second of all, in a trade war with the entire world, they're going to keep trading with each other. So the United States is going to be hurt more than other countries are because we're doing all of our trade is getting hit. For them, it's only a fraction of their trade getting hit. And then the third thing is the short-run pain is in exchange for more long-run pain. Because if we reduce our exposure to the rest of the world, it's going to be long-term, higher prices and worse jobs and slower growth.
Here's a problem I see. Say we get what we want and tariffs kill factory jobs in Vietnam and Indonesia this year. Say we even get those factories moved to the U.S. where 5 years from now, robots are doing the grunt work. Haven't we created even bigger trade deficits because there's no human middle class in Vietnam and Indonesia to buy the Nike shoes and hoodies the American robots are making?
Look, I think you just got a point. First of all, for the United States, either we have millions and millions of Americans put to work sewing T-shirts as their main job instead of the jobs they're doing now. These aren't new jobs. This is you get fired from your existing job, you have to make T-shirts, or we have the robots make them, in which case we're not getting jobs. And yes, we're impoverishing these other countries. You know, the core thing about trade is it is positive sum. Both sides benefit from it. When I go to the store and buy something, I like the thing I buy. I don't mind parting with my money for it. Same thing with trade and with imports.
I want to play a little soundbite for you, touch on the Main Street versus Wall Street question. Here's what U.S. Trade Rep said to Congress today.
Senator, we're not going to be in a situation where we keep allowing Wall Street to run the economy. And as we're making that transition, companies will need to adjust.
Jason, my sense is Wall Street stock prices, in a simplified sense, represent our expectations of the future profits of large, mostly American businesses. Stock prices are down because investors fear tariffs are going to crush profits of big business. But big business has a lot of cash, really strong credit for borrowing money. They can withstand tariff pressure much better than Main Street can. So if there were a Main Street index, my sense is it would be tanking even more than the S&P has. Am I wrong?
Yeah, I mean, the thing about the market is it's forward-looking. It reacts instantly based on what it thinks is going to happen over the next 6 months, year or two. Something like the unemployment rate, it moves more slowly, but we're sure it's going to move up.